Welcome to the Profit Answer Man, Jose Berlanga. It's great to have you join us today.
Rocky, thank you for having me in your show. It's great to be here.
And as always, we love to learn. So, can you share a little bit about yourself and your business?
Yes, predominantly I am in the real estate business, land development, residential construction, commercial. I own a lot of investment properties in the real estate business. But most importantly, I'm an entrepreneur. I've been in a lot of different industries. You name it, I've probably had something to do with it at some point, whether it's a partner, an investor, or an operator.
So, what got you into real estate?
It was a little bit of an accident. Always say that all of us are in real estate one way or the other, sooner or later, even if we are tenants, even if we are buying a home, even if we're building something or eventually need a property, it can gradually turn into a business. We normally, little by little, end up in this business, whether we intend to or not. Originally, my intentions were to start a construction company with my brother, who is an architect. And little by little, we started getting more and more into it, where I invested a couple of decades building homes and doing land development projects.
What made you stick in it, though? Because I know you said it wasn't really what you wanted to do.
I had no intentions of staying in this business in the long term. Really, my objective was to start the business and build it and move on to something else. I really did not want to be a builder for all these years. But this is one of those businesses that once you get in it and you start getting more and more involved and start investing more time and money and energy, it starts becoming a career. It just absorbs you, where it's never an easy time to get out of it. One of the reasons it's difficult to get out of this business is because it is very, very cash intensive, capital intensive, where at some point these cycles are long. You invest money and you don't see it for a couple of years. And sometimes you start a new project before you get out of the first one, and it starts becoming a domino effect, where there are years when you're doing so well, making a lot of money, you don't want to get out of it. And there are years when it's doing horrible, but you can get out of it because you have so many problems and so many deals to work through. So it's one of those businesses that it's not easy to turn on and off overnight. You have to phase out of these developments a little bit at a time. So it's somewhat the nature of the business forces you to remain in it. And before you know it, you've been in it for longer than you can think of.
It's funny. When business is good, people don't want to sell. And yet, that's when the business is most valuable. If the business is losing money, nobody wants to buy it. And so you have that weird dichotomy of, I guess you have to decide how much is enough and when is enough.
And also, what is very, very difficult is to time the business, because when it's worth a lot, we tend to think that it's just going to be worth more if we wait a little longer. But it's not always the case. There are cycles, there are peaks at some points in our career and in our business. And I've been through that, where my business was doing very well and maybe there was a possibility of selling it. But then something happened, markets change, circumstances, economic issues come about, and then you wish you had sold, or you wished you had slowed things down when the time was right. But it's hard to time it.
Out of curiosity, where do you think we are in the real estate cycle right now?
I think this has been one of the difficult periods to detect, to determine, because there are some good things and some bad things in the real estate industry. Of course, interest rates is the big issue. They're high, but overall inventories have been low until recently. And it has been difficult to determine whether it's a good time to either buy or sell or to continue developing. I think we're past the worst. I'm waiting. I think we're all eagerly waiting for these elections to make a difference, because what I'm seeing, what I'm noticing, is that there is more emotional and psychological slowdown in our industry, which is really the result of people wanting to wait. We see a lot of qualified buyers and a lot of investors that are just sitting on the sidelines, not because they can't buy or invest or expand, but because they don't know if it's quite the right time to do so. So they're just waiting. I think once we get that message that things are moving forward, we're past the elections, interest rates continue to go down, a lot of money is going to be deployed in buying and investing in growth. So I think we're towards the end of a relatively difficult time that we've been through over the last year or so.
It's interesting because real estate is a different kind of cyclical in the sense that you talked about interest rates. And so it makes it expensive for people to buy a home today. At the same point, if you're sitting on a 2.5%, 3% mortgage, you don't want to give that up. So you're not selling your home. But if interest rates drop, I'm wondering if there's going to be a flood of inventory come out, which again, if there's a flood of inventory, prices will plummet.
Yes, yes, this is a confusing subject that we're all trying to figure out in which direction is going to go.
Yes.
And you're right. Builders and developers, when things slow down, one of their biggest competitors represents resales, resale property, because circumstances are not necessarily related to interest rates. This time around, we had very little resale inventory to compete with. There were other
Mhm.
issues, other factors that were affecting us. So that is the big question. What is going to happen? In one hand, we're going to see all these buyers come out and start purchasing properties. On another one, that is the question: how many people are going to put up their homes on for sale on the market? The consensus, I think, our forecast is that it's not going to be that bad because people that need to sell are already doing so, and the ones that didn't, they've either have their home paid for, they have a lot of equity, they might end up holding it and putting it up for rent. Baby boomers that
Mm.
have property that don't necessarily want to get rid of, they're just keeping it as an investment, and a lot of them are just upgrading. So you're going to see a lot more movement, change in ownership, but we don't feel that, being that this was not necessarily an economic bad cycle, it was just high interest rate. It was a lack of affordability more than
Right.
an economic issue. So we don't think it's going to be a big problem when interest rates drop.
And it's funny because people don't realize you're talking about turning your home into a rental. But yet when interest rates drops, buying a house becomes more affordable. And I know the last couple of years rents have gone up a lot. So that might shift the rental industry and rents may drop, in which case people don't want to hold the rental property because it's not giving them a good return. There's all these
Yes,
moving parts.
exactly.
It's
Are.
hard.
And of course, as cities, urban areas grow, there's enough for everyone. There are people who are moving back and forth from one city to another. They don't want to be locked down to a mortgage. So I think there's a little bit of everything. And really, the rule of thumb is, as long as the economy is solid, as long as employment is moving forward, in psychologically, we feel that we're able to live in a great place and pay the rent or pay the mortgage, we normally get out of those uncertain times. So we're thinking that we've been through the worst in the real estate, at least in the residential. Well, there are other issues, of course. We're still struggling with a commercial, mostly the office space after COVID. That's still an issue that is being resolved. I think that's a whole other subject that might take a little longer to discuss.
And I think that's the key with real estate. It's locality and use. And, you know, commercial may go down, residential may go up. It might be up in your neighborhood, it might be down, 50 miles away.
Yeah.
You just don't know. And it could even be, I know in certain cities, it's block by block. And that's how local it can get. And you really
You
have to understand your markets.
Yeah.
If you don't, as you said, you're making choices today. You're making large capital investments today, and you've got to make sure you can cash flow to the end. Because if
Yes,
you
yes.
don't,
And
the deal blows
you're
up.
very right. You're very right. Real estate, you cannot generalize it. It's by region, by area, by price point, by type of product. And normally we tend to think it's either doing well or it's doing poorly, but not necessarily. Sometimes, me, after being in it for so many years, sometimes the lower price points are doing great. The multi-million dollar properties slow down, and other times vice versa. Vice versa, they're affected by different things within the economy. So they're not all real estate is equal.
No, it's not. And it's a long term game, which means you have to make long term decisions and think through. I know a lot of people, especially in land, will buy land today that they don't even plan on developing for 5 to 7 or 10 years. We've got a local builder here, and he will he'll buy up land knowing that at some point he's going to redevelop it. So they'll buy a golf course and they'll let it run as a golf course, and it might lose a little bit of money. And then one day, all of a sudden, it turns into a development.
Yeah, yeah.
Or it could be commercial space just sitting, waiting for the opportunity to when it makes sense. But you've got to have the capital reserves to do that. So let's get
Yeah.
into kind of the nitty gritty of real estate. I've worked with a lot of builders. I've worked with a lot of people who were, just average Joes flipping a few properties, doing different kinds of things. Because real estate allows a vast majority of people to get involved in very different ways. The couple things that I find is, especially as they start small and they start to grow, is if you think about it, whether even if you're just remodeling a house, but in your case, you're building a home. Do you have any idea how many different items actually go into a home? Like, how many thousands of
Uh, Thousands of components and parts and items, but not as many vendors and contractors to keep track of. That's the good thing.
right.
That you can consolidate those by categories to simplify your accounting, and that's where you can probably make things a little easier.
And I think the big thing there, though, is being able to tie, and because this is what I hear, our guy goes out to Home Depot, they run out to pick up a handful of things, or maybe it's the lumber supply, and they're picking up work for 6 different jobs. And if they don't know how to properly allocate each part of those items to each specific job, your accounting becomes a mess and nobody knows if they're profitable or unprofitable or where the leaks are. I'm guessing you've built systems to be able to handle all of that.
Very much. It takes time. I have to admit that it's not something that someone can master overnight. I've seen hundreds of people over the years come in and out, do a project, assume that it's easy, that anybody can do it. They lose their money, they move on, and they ended up not making any money, get discouraged, and not try again. But there are many things to consider here, because we can break this number subject, this budgeting, into several categories. One of them, let's start with the number one, which is trying to get organized, planning, budgeting before you start the development. Believe it or not, many people do it as they go. They're getting proposals as they go instead of planning, and they don't keep track. Here's another one, another example. A lot of people do a budget and they may price out everything they need, but they stop doing bookkeeping and entering everything so that they keep a tally by category of what they're spending. And before you know it, they lose track of the money that goes in and out and for what purpose. If you're not detailed to the penny on what it is that you're spending and what you're spending it on, it is very easy to start losing track. So from day one, you have to be one of those people that the moment you spend it, you log it, you identify it, you record it, and move on to the next one. Don't leave it for later. A lot of people tend to procrastinate. This is something that I've been not only in this business, but I've lost businesses in the past because we had poor bookkeeping and the wrong person keeping see the administrative side, the accounting side, as your most important instrument to run your company. You don't know if you're making money or not if you don't have accurate and timely information. Where are you spending it? How is it going? Where is the cash going? Is a mystery of many businesses. And if you don't do it on a timely basis before the fact, that's a big problem. So, and the other one is lack of experience, assuming, being too optimistic when you operate a business, whether it's construction or anything else. You tend to think that you're going to be able to do it better. You're a better negotiator. You're faster. You neglect some of the carrying costs. You neglect some of the categories that perhaps you didn't even know existed. And that lack of experience eventually starts kicking in, where you realize that there was much more than you anticipated. So knowing the business and planning it is another thing.
And those are, we're talking about this as if it's so simple, but it's not. I've dealt with a lot of people in this space, and being able to not only plan up front, but B, compare at the end, how did I do versus my plan, and then change your bidding or your pricing going forward. I knew during COVID there were a lot of people who didn't pay attention to input prices. And during that period, things spiked and moved so quickly that builders were selling houses and they had to bring a check to closing
Oh yeah,
because the cost went up so much. They actually had to pay somebody because they built this house, which you can't do that and stay in business.
yeah, yeah.
And if you don't know where the problem is, you can't fix it. So you've always got to compare to budget what's going to happen. And I think the other thing, it's difficult in building, it's also difficult in manufacturing. It's what we call, people talk about the WIP account, which is work in
Work in
progress.
progress, correct.
Yeah. So for example, you're building a house and you might have put in the basement, you've done the foundation, you put up the framing, and you put up the roof, you put up the shingles, and you look at it and go, well, I've spent $125,000 out of 300. I'm doing fine. How do you know? How do you know that that 125 was ahead or behind plan based on what has already been completed? You might already be 20 grand over budget and not realize it unless you actually match your cost to your timing. And then I know in the building industry, you've got a time when your money's coming in to match all of that. At least in building, you get money along the way. In manufacturing, you might get a deposit up front and then you get money when it's finished.
Yeah.
But you have to keep track of all these things and know how it works, because
Oh,
otherwise.
yeah, yeah, yeah. And it goes with every industry. That's interesting. You bring up that example. I've in our early years, or when we're doing some isolated development project out of the ordinary, where we just don't have the ability to plan with so much precision. Let's say that we plan to build something for $200 a foot, or whatever. uh, as you're looking at it in real time, oh, I'm only at 100, I'm only at 110. So you nailed it. But the question is, what am I still missing? And in relation to what am I missing, am I still under budget or over budget? The answer is, you cannot budget a development or a project in its totality. You have to do it by category and log in your costs category by category and compare what you budgeted on for that item against what you ended up spending. And little by little, you start filling in the blanks to understand whether you're on the right track or not. So, and adjust as you go, but you have to be very, very familiar. Also understand that there's going to be surprises, unpredictable things, but it happens. Believe it or not, it's a big issue with construction and in real estate, but it's an issue with every industry that I've ever been in. Managing numbers, having the discipline, first of all, to understand the industry standards for your accounting, for your work in progress, for the cost that it represents to operate your business, to understand that, and then have the discipline to keep it up to date every day. One of the issues, one of the problems that entrepreneurs have is that they tend to be very technical, very artistic, or negotiators. They love the business side. They don't love the office work. No, not many people do. Not many entrepreneurs. So they put it off. They procrastinate, and before you know it, you start trying to figure out why. If you're selling all this in what appears to be a successful business, but you're not making any money. So because you're not paying attention to every dollar that's going in and out and what is it being spent on. So information.
And it's funny because I also work with people in the marketing space and kind of in the creative space. And it's no different. If you're building a website or you're doing a project that's a 3-month project, if you're not tracking your employees' time spent on building what you're designing or delivering to the client, you don't always know. And when we start to actually tie out employees, billable time, and how much time they budgeted versus how much time it actually took them, we start to see that a $50,000 project could be unprofitable and a $5,000 project might be super profitable. And if you would just sell the small, teeny $5,000 projects, you make money hand over fist, but it's not the glory of the $50,000 sale that we all chase after. And yet, if you don't
Absolutely.
look at the numbers, you don't know that.
That's very important that you mentioned that, because I break this into two categories. One is costing things, understanding how to cost. Whether you're making a dish for a restaurant and knowing how many items of each one of your condiments and ingredients you need in order to do the dish, or whether you're building a car or a home or whatever it is, you need to break down and understand the items in that particular industry before you can sell them. There are other intangibles you operate. How many of those items do you need to sell in order to break even and cover the other expenses that your company represents? We neglect to do that sometimes. What is my time worth? What is my team's time worth? How much of X and Y and Z do I need to sell every day and every week and every month in order to break even, and then eventually to start making money? So that is one factor. Really, time represents so much. I'll give you an example of something that we learned early on. Let's say we were selling a development, or a home to one buyer, and we were going to make X number of dollars. Let's just say $50,000, to throw a number. Well, we started understanding that dealing with one buyer was taking so many resources out of our company and our team, everybody's participation, that we understood at some point that building for one buyer would cost as much or more as building 6 homes without a buyer. I'll give you that's just a simple example of what you're saying. Our efficiency would be affected by dealing with certain products and certain customers, where it was better to just build our cookie product without having anyone slowing us down and make less per unit, but multiply times more units. So there was a cost involved. And like you said, it sounded attractive to make more money on one particular transaction. But when you added the amount of time and effort and energy and all those other variables that may not be so tangible, it ended up being a losing project. It ended up being a loss for the company. So you have to know your niche market. You have to understand what business model. Here's a key factor, the key ingredient. What is your business model? Are you building one house a year or 100 houses a year? What prices, what finishes, what selections? The same goes for the food industry. What type of menu you have? Is it a fast food or a high end? In order to price things and make money, you have to understand and differentiate the product that you're in versus the rest. in the industry.
It's funny you mentioned that. We use the same formula for every business that we figure out the math of that business. Now, in some businesses, parts of the formula, there's a zero in front of it, meaning, you know what? In this business, that part of the formula doesn't apply. And once we start to understand how that whole equation plays out, then we start to see where we have leverage. And we start to be able to answer these questions. Hey, if I build 100 homes at this and I do it in this much time, how does that compare to 10 homes at this price and in these types of constraints? And when you start to look at all the math, it becomes crystal clear what the decision is for what your skills and your business ability are. I find very few business owners do the math to figure out their business before they do it. And it doesn't matter what kind of business it is. I have one client who I worked with and they wanted to open up a new location. And so we asked a handful of questions and we showed them the math. I said, "What do you want to do?" He goes, "That's going to lose money." I go, "Yes, it is." And so we said, "Well, maybe we can do something else. Here's some other ideas." And they tried some other ways of doing it that may or may not work. But again, you always have to be able to understand the business before you begin. When we were doing the real estate stuff, we always knew our math before we made the offer on the property because we knew how to back it all the way out. Now, is it going to be perfect? No, it's a guess.
Yeah,
But at every step of the guess, we left a massive amount of margin so that if we made mistakes, we could adjust. And throughout the entire process, we were constantly keeping up to say, where are we versus our budget? On track, ahead of track, behind track. And then we could make decisions of what to do, not to do, and how to adjust as we went through. And I know in the book, one of the things you talked about, and I think this is what people don't realize, little costs can multiply massively and add up to very, very big numbers. And if you don't understand that your particular business happens to have a lot of little costs with a big number in front of it to multiply, as you said, you build a home, there's thousands of things that go in there. I don't know how many light bulbs are in a home, but, let's say there's 50 light bulbs in a home. Every time you pay $1 more for a light bulb, it's $50 for that times 10 homes and next thing you know,
yeah, yeah.
and that's one item. Now, if you do that times 100 items, all of a sudden you're talking some serious cash. And that's why the little things really matter.
Correct, correct. I agree. I always talk about trying to differentiate an overage, an over budget, or a delay versus the accumulation of overages and delays. Those are the painful ones. It's not just one that's going to affect your business, it's the accumulation of all these small ones and paying attention to it. Something that will resonate to your audience, to your entrepreneurs, is the fact, and this is a fact, that many vast majority perhaps of business owners are professionals who are not necessarily business people. They are either executives that work for another company, or they're professionals such as doctors, attorneys, dentists. They are highly educated people because they're very technical, they're creative, they're artistic, or they're savvy within their industry, but they don't necessarily either understand numbers or enjoy numbers. So they don't focus on that, and they focus on understanding what they do and how to be the best at what they do, but not necessarily how to maximize their business, how to run it, and how to make money, and how to manage a business. Many times we enter an industry hoping to do whatever it is that we enjoy. We love boats, so we're going to build boats. And before you know it, the last thing you're doing is being on a boat. You're dealing with payroll, and you're dealing with cash flow, and you're dealing with employees, and you're dealing with all these things without really spending any time doing what you enjoy about the business. So that is what we need to understand, that entrepreneurship represents doing a lot of these things, understanding your optimum pricing levels. For example, do I want to sell three units that make $10 a piece, or 100 units that sell three that make $3 a piece. Optimizing your pricing and your profitability and your costs, it's something that we all just have to dedicate and devote a little time to. So it requires understanding the little areas of the business, like you said, your work in progress. What does it cost to do what you do? In what are do I leverage? Do I need to borrow money? What is the cost of borrowing money versus maybe using other sources? There's a difference also between accounting and finance. You can, but one is bookkeeping and keeping records of things. The other one is financial engineering, which is understanding the utilization, the optimal utilization of your resources and making the most out of every dollar. All of these things, little by little, a lot of people don't realize that they're part of a business, whether you're a technical person or not.
And it's true. And I think this is where people get confused. They go to their bookkeeper or their accountant and they expect them to do financial engineering. And that is not their skill set. Their skill
Very good.
set is accounting and bookkeeping. It's not being able to answer these questions that we're talking about. And if they don't know how to have the conversation, it's kind of like one person speaking Spanish and one person speaking German. Like nobody knows what the other person, or they're misconstruing what each other says. So having that is understanding all of the languages is extremely important,
Yeah.
and being able to be clear and to know, call it wisdom. Like I can look at stuff and I'm like, that doesn't make sense. Like in my head, mathematically might be what they say on the paper, but it's not possible. And actually, I saw that actually. I went to this real estate seminar. And I don't know if you've ever been to one of these things where they teach you how to make all this money and everyone runs to the back of the room. Well, he put up a deal on the front of the room and he went through the whole thing. And I looked at it and I said, your math is correct, but your assumptions are all wrong. No one's going to sell you the house at that price. You're not going to be able to flip it for that price. You're not going to be able to do this. Construction, like, yes, the numbers all added up, but they were make believe.
Yes, yes, yes. They are all created, and they're not part of the real world. And a lot of times that's what they teach you until you start experiencing some of these things on your own, and that's why we always need to talk about the fact that you may fail in some of these exercises, and you have to understand that it's part of the process, part of the learning curve in every business, and to constantly be improving. Understand the differences in languages. Not all numbers are equal. Just like you said, if you're trying to talk finance with your accountant and vice versa, they're not going to get what you're saying, or they probably might lead you to believe that they do, but it's not going to make sense. One of them is recording information, the other one is deciphering the information, making sense out of it. The same goes, for example, where a lot of entrepreneurs don't really understand the enormous difference between profits and cash flow.
Mm.
They're two completely different animals. We think that if we have cash, we're making money, or we think that if we're profiting, we are saving cash or raising. Not at all. Not at all. They're completely different, like you said, with different languages, the English and German. And if you don't understand what it is that you're looking for in within the business, for example, you can lose money for a long time and continue being in business as long as you have the cash flow to support it and you keep raising for certain stages of your business. On the contrary, you may be profitable, but if you run out of cash, you're going to go out of business overnight. These are things that are very elemental to some people that are understand the language of money, and some people who are great at their science or their craft, but they don't understand some of these fundamentals.
And you can be profitable and have no cash.
Absolutely. Yes. That
Yep.
is another big disease. We make money, and many entrepreneurs spend it as fast or faster than they're making it in a number of unrecorded, without really evaluating where and why. And this is where information needs to be available.
And honestly, for me, I see the classic example is somebody new in real estate. They get one or two good deals under them, and then they decide to do 10. And somewhere in, they go buy 10 properties, and about the third rehab, they run out of cash. And now they can't fix any of them, and the whole thing
Collapses.
implodes.
It's a house of cards
And they
falls.
might have been profitable. Each deal might have been highly profitable, but they didn't have the cash to make it get to the finish line. And that's why that is so important to be able to do it.
Yeah, absolutely. Another tricky one is leverage. How much do I borrow? Should I or should I not? How much can I support? How much can I repay? What is the healthy amount? Leverage is an amazing thing that can help catapult the growth of businesses, and it's almost necessary in many cases, but it can also be misused or abused, where, like you said, you start growing too fast, and before you know it, you cannot support the debt and service your debt, and you can deteriorate and destroy a very profitable business overnight.
That you can. All you have to do is look around and see how many great businesses went belly up. Happens all the time.
It does.
If people would like to learn more about you or about your book, The Business of Home Building, where can they find you?
Well, the book is for sale, of course, on Amazon. I wrote this book as something that was very interesting to me. By the way, I'm continuing my writing. I'm already on the third book as we speak. So we'll be seeing more of these subjects, entrepreneurship and other interesting subjects for me. And joseberlanga.com is all of my normal social media accounts that are out there. But yeah, I intend to really continue the second stage of my career, which is writing and understanding, continuing to understand and mentor people in the business world.
Okay. Nice. And we'll put the links in there so people can find you. Thanks so much for joining us.
Rocky, thank you so much. It's been great being here with you.
Thanks for listening to this unedited video of the Profit Answer Man podcast. If you'd like to catch the full episode and learn more about what we do, check us out at profitcomesfirst.com. We also go through the Profit First book in each and every chapter in the beginning episodes of the podcast, so check those out as well. Thanks for listening, and here's to you having a more profitable and growing business.